It's Carter. Welcome back to the channel. Hope you guys are all having a fantastic day today. Now, in today's video, we are going to be talking about the absolute best swing trading strategy that I've used over the past 7 years. I actually used this swing trading strategy to quit my 9-to-5 job. So, guys, we are the 9-to-5 quitters. I hope you guys all enjoy this. If you guys do, smash that like button, subscribe in. If you guys want to elevate your trading game, check out our school. It's awesome. It's called the Swing Trading Masterclass. We have private live streams, quizzes, lectures, a group chat, but more importantly, we actually teach you to trade. It's not a get rich quick scheme. It's not alerts or anything like that. This is honest strategies that I've learned over the past 7 years, the strategies that I've used to quit my 9-to-5 job. So check it out down below. And you guys can use code TRADER to get 51% off, which is one of the largest sales we've done. So click that link, sign up. I'll see you guys in there. We have a group chat, so say hi. But let's jump into this here. So the first thing I want to talk about is that's everybody's main goal is to quit their 9-to-5 job. But I want to be completely upfront about this. I've been trading for over 7 years. So some of the stuff that we talk about today may seem overwhelming. It may seem confusing. But the biggest thing is you guys are taking that first step for learning. And I'm going to do my best to go over everything I can. So stay tuned and let's get started here. So as a swing trader, the first thing you guys need is going to be a broker. A broker is how you have access to the stock market, right? Because you can't just like call up a random person and be like, hey, buy 10 shares of GILD. That's not the way it works anymore. You know, back in the day, of course, you'd have to call up your broker. They would see the going rate. You know, you pay them. They would pay. It was just expensive. It was overwhelming. Nowadays, they have online brokers like Moomoo. So Moomoo's the trading broker that I use. I love them. They offer paper trading. So if you're just getting started with trading, you guys can practice simulated. And they do offer fraction shares. So even if you want to start out with like $100 or $200 to get that ball started, you guys can do it here. So I'll put a link to them down below. You guys can get up to 30 free stocks just by signing up. So when you guys trade, you don't just buy random companies. And this was a huge adjustment for me when I first started because I constantly would see people on YouTube and they were making so much money. I thought they were just buying random companies and any stock you bought would go up. But I soon realized after I burned through several accounts that that's not the way traders make money, right? They have a strategy. A strategy is just an edge over other traders and an edge on the market. So for me, I love just a standard approach. I love the expression MISS, M-I-S-S, make it simple, stupid. I'm not going to overcomplicate trading. I'm going to keep it as basic as I can because it's already overwhelming. So why would I even make it more confusing? I'm not the type of trader where I'm going to have 30 monitors up. I'm going to have, scanners going at all times. No, that's not the way I trade if you guys know me for a while. So, I love just a standard checklist, a checklist to make sure the stock I'm buying follows my approach. So the first thing here with GILD here, which is a stock that we recently took a position with, is trends. So trends is probably one of the most important things a trader can look at. I mostly look at the past year. So each of these lines here, if we look close, represent 1 month of trading. So as we go back 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So about the past year, we've seen great buying pressure going from lows here at about $63, highs up here at 120. Now, this has a good trend. A lot of traders think that you get a stock on a downward trend because you can buy it super cheap, when in reality, a lot of those companies are just like completely worthless and it's just not even worth the trade. So after we know the trend, the next thing here that I look for is support. So support is where a stock and company has natural tendencies of getting buying pressure. Because as a trader, I focus on technical analysis. There's 2 ways you guys can evaluate a stock. There's technical analysis and then there's fundamental analysis. Technical analysis is looking at indicators like moving average lines, RSI lines, MACD indicators, and then fundamental analysis, think of more like Warren Buffett, looking at, fundamentals, looking at the revenues, cash flow. Now, traders pay attention to technicals and long-term investors often pay attention to fundamentals. So honestly, at the end of the day, we really don't care about this company after we sell it. We just, make sure it follows our strategy. So like I said, support. So support here could be a variety of things, like I said. With this stock here, GILD here, it has this yellow line. This yellow line is what we call a 50-day EMA line. Now, what this does is it takes the past 50 days closing prices, it merges them together to form this line. This line, as you guys can see, it hits it, and we have natural tendencies of getting extreme buying pressure in the past year, right? So, sold off, hit it, right? Even in here, hit it, hit it, hit it, hit it, hit it. So for me, for it to be classified as support, I want a minimum of 3 touches of buying pressure. So this is a moving average support. Sometimes here with trading, you also will have like a trend line, where this one doesn't have it, but where a straight line forms a stock's buying pressure line. So this one doesn't have it here though, but you can see it sold off down to that yellow line here. So the next thing here on my checklist is going to be the RSI. The RSI was trading for about a 38, which the last time it was trading for a 38 was back in this range where it hit that 50-day moving average line and we had good buying pressure. So let's go over this again. We have a stock on an upward trend, sold off down to that 50-day moving average line. It's undervalued on the RSI. Now, the last thing you want to do is enter the position right here and just see it continue to sell off, right? So what can you do to change and make sure there's some sort of confirmation? So for me, I look at some sort of lower time frame. Going to like the hourly or even the 30-minute chart to establish a new trend or confirmation or breakouts, very, very important here. So looking at this here, let's remove this. You guys can see just this slow and steady trend line where it hits it, sell off, sell off, sell off, right? So it has that trend line going down. So as you're watching the stock continue to sell off here, you don't just buy it. What you want to do is you want to throw an alert above this trend. So as the stock just continues to sell off, you're moving your trend down and down and down. So now here's the stock popped up, getting in on a good price here on that trend line. Now, when you have that alert set above it, what you want to do here is you want to make sure there's good risk management. So you get in on that trend, you keep your stop loss 2 to 3% from the current price for a possible push up to resistance, which is just going to be this zone where we have sell off. So anywhere from 117 to 119, which gives a risk and reward of near and around a 3-to-1 risk and reward. So imagine you guys were starting out with a small amount of money with like $1,500, right? You find a stock like this over the course of a year, maybe 40 times, risking 3% for a possible risk and reward of 3.26. So 3.26. Your win-loss percentage can be very low, coming in even at 50%. At the end of the year, your $1,500 balance has grown to $5,200. And this is why people stress risk management is so important, is because this is the numbers behind it. This is the numbers to back it. So even if your win-loss percentage was 30%, at the end of the year, you're still profitable. I think you could even make money with like 27%. So you lose like a bunch of your trades and you're still profitable at the end of the year. Yeah, you're probably underperforming the market, but more importantly, you're trading and you're practicing and you're learning. So, that's why good risk management's important. So now as the stock continues to move its way up, we're just going to keep our stop loss up and up and up. But yeah, that's the absolute simplest strategy you guys can do to quit your 9-to-5 job. I've done it. I hope you guys all enjoyed this. If you have any questions, feel free to ask down below. Smash that like button. Check out Moomoon. Don't forget to check out our school called the Swing Trading Masterclass. It's fantastic. So I'll see you guys in there, but I hope you guys enjoyed it and take care.